Let's get into this real estate crowdfunding thing again and talk actual money, shall we? I mean, who wouldn't want to turn a little monthly investment into something more substantial, right? Picture this. You're putting away just £100 a month. Not a fortune, but it's something manageable, like skipping that fancy coffee or those takeout lunches. Now, let's see where this can lead you in a year. First off, let's break down what real estate crowdfunding actually is. It's pretty much a way for regular folks like us to get a slice of the real estate pie without having to buy a whole property. You pool your money with others to invest in real estate projects, and in return, you earn a share of the profits. Sounds great, right? But as with anything, it's not all rainbows and butterflies. Now, if you're investing £100 a month, that totals £1,200 over the year. But here's the kicker. The returns can vary wildly depending on the platform you choose and the specific projects you invest in. Some platforms promise returns of around 8% to 12% annually, while others might offer even more. But let's keep it realistic. If you're looking at an average return of, say, 10%, you could be looking at around £120 in returns by the end of the year. But hold your horses, that's just the return on investment. You've also got to consider the fees that come with these platforms. Some charge management fees, others take a cut of your profits, and some might have withdrawal fees. So that £120 could shrink down a bit after those fees are taken into account. It's like going to a buffet and then realizing you've got to pay for drinks and desserts separately. Now, let's talk about the platforms. There are quite a few out there, and each has its pros and cons. Some of the big players in the UK market include platforms like Property Partner, Crowdcube, and Cedars. Property Partner is pretty popular because it allows you to invest in actual properties and earn rental income as well as potential capital appreciation. It's like being a landlord without having to deal with the pesky tenants. But keep in mind, they do have a minimum investment, and the fees can add up. Then you've got Crowdcube and Cedars, which are more focused on equity crowdfunding for property development. These platforms let you invest in property development projects, and the returns can be enticing, but they also come with higher risks. You know what they say, higher rewards often mean higher risks. So if you're feeling adventurous, these might be worth a look. But here's the thing, it's essential to do your due diligence. Don't just jump into the first platform you see. Check out the projects they've funded in the past, read reviews, and see how transparent they are about their fees and returns. And remember, just because a platform has a shiny website and flashy marketing doesn't mean it's the best option for you. Now, let's say you've done your research and found a platform you like. You've invested your £100 a month for a year, and you're feeling pretty good about it. But what happens next? Well, the beauty of real estate crowdfunding is that it can be a relatively passive investment. You won't be out there swinging hammers or painting walls, but you do need to keep an eye on your investments. You'll want to stay updated on the performance of the projects you've invested in. Are they on track? Are there any delays or issues? Some platforms provide regular updates, while others might leave you in the dark. Just remember, this is your money, and you deserve to know what's happening with it. And here's a little nugget of wisdom. Don't put all your eggs in one basket. Diversifying your investments across different projects can help mitigate risks. Maybe invest in a mix of residential and commercial properties, or spread your investment across different geographical areas. It's like having a diversified diet. You wouldn't want to eat just one food all the time, right? Now, let's circle back to those returns. As I mentioned earlier, a realistic expectation might put you at around £120 after a year. But what if you keep this up for a few years? If you maintain that £100 monthly investment, you're looking at £1,200 a year. After 3 years, that's £3,600. And if your investments continue to earn that 10% return, you could be looking at a nice little profit by the end of year 3. But let's not forget about the power of compounding. If you reinvest your returns instead of cashing out, you could see your money grow even faster. It's like a snowball effect. The more you invest, the more you earn, and the more you earn, the more you can invest. It's a beautiful cycle, really. Now, if you're thinking about jumping into real estate crowdfunding, just remember it's not a get-rich-quick scheme. It requires patience and a bit of strategy. You might not see massive returns in your first year, but over time, with consistent investment and smart choices, you could build a nice little portfolio. So, to sum it all up, investing £100 a month in real estate crowdfunding can potentially yield around £120 in returns after a year, depending on the platform and projects you choose. Do your research, diversify your investments, and keep an eye on your projects. And who knows, in a few years you might just find yourself with a nice little nest egg, all from that modest monthly investment. Now, isn't that a cool way to grow your wealth?